everyone, this is a study on the differences in investment incentive and technology incentive between Malaysia and China. Our group member consists of 5 of us, Azima, Maisara, Shafika, Azra, and Mario Ray. Let's hear the introduction from Azima.
Hello to Miss Lim and everyone. My name is Azima Shazida binti Sulaiman and my metric number is 154199. Today I'm going to present on the introduction. Government from most of the countries apply taxation system which all income derived from the individual or organization are compulsory to pay tax with the rules and policy imposed. The aim of this tax system by the government is to gain fund for the country spending which is significant for the economic growth and development of country. Tax incentive in Malaysia is offered as tax allowance and tax exemption. The mainly type of tax incentive is pioneer status, investment tax allowance and reinvestment allowance. Malaysia uses this incentive to increase the investment in the economy. Malaysia also imposed foreign direct investment FDI mainly to gain capital and improve economic growth. As an initiative to increase the green technology, there is a green investment tax incentive imposed by the government for organizations buying green technology asset, which is green investment tax allowance and green income tax exemption for organizations giving the service. As Malaysia, China also has their own tax incentive imposed by the central or local government to increase economic activity. China also imposed foreign direct investment and it has been a significant part of the economy. Tax incentive in China is given based on the size of their business, where small businesses are eligible for tax incentive to help them survive. China High and New Technology Enterprise (HNTE) program. HNTE is one of the significant innovation in China. The HNTE is a tax policy where the organization that involved in new technology is qualified for 15% tax rate, then 25% the general rate. The organization within the provinces is given HNTE according to the tax authorities in that provinces. That's all from me. Thank you.
Hi everyone, I'm Azra Parimitinia Sali. Let's move on with methodology. The research method used in this study is secondary data collection. The data are collected from existing data such as materials published in study reports and other documents. The data are collected from online platforms such as Google Scholar, Journal, and official government websites to obtain the relevant information on the tax system in Malaysia and China. The data are analysed and compared between Malaysia and China. That's all from me. Let's continue with our next part, which is discussion. Thank you.
Good day, Ms. Lim. My name is Nur Shafika binti Muhammad Saleh. My metric number is 154280. We're going to be continuing the presentation with results and discussions. First, tax incentives in China are preferential tax policies offered by its local or central government to incentivize or encourage particular economic activity or to support disadvantaged business owners or individuals, whereas in Malaysia, tax incentives are granted either by income exemptions or any kind of allowances up to enhanced tax deductions. The good thing about incentives granted by way of allowance is that it can be carried forward indefinitely to be utilized against the future statutory income, except for certain tax incentives. In Malaysia, we have pioneer status and investment tax allowance. Pioneer status is a tax exemption for companies participating in promoted activities or producing promoted products. Investment tax allowance is an incentive granted based on the capital expenditure incurred on buildings and plant and machinery involved for the purpose of promoted activities or production of the promoted products. Both are granted for 5 or 10 years. Pioneer status is an exemption of 70% from the corporate income tax of the statutory income, whereas investment tax allowance is the exemption of 60% qualifying expenditure incurred for the period mentioned, and it can be utilized against the 70% of the statutory income. On the other hand, in China, we have tax reduction and exemptions. In China, it uses a tax incentive policies of predominantly industry-oriented and limited geography-based tax incentive, whereby they focuses on one main sector rather than all of them together. For agricultural industry, there will be an exemption of 50% reduction of all the years they are engaged on the projects. For specified basic infrastructure projects, there would be 3 plus 3 years of tax holiday, which is 3 years of exemptions and 3 years of 50% reductions on the corporate income tax. And lastly, self-development animation product which are produced by certified animation enterprises. There would be 2 years of exemption from corporate income tax, followed by 3 years of 50% reduction from their corporate income tax. Thank you.
Hi, I'm Ma Yurui. I'll talk about the two countries' differences of the technology tax incentives. There are also significant differences between China and Malaysia in terms of technology tax incentives. Both implement preferential policies for enterprises in technology industry that meet certain conditions. But the tax incentives in China are mainly for those relative areas of high-tech enterprises. For example, some cities with rapid high-tech development, such as Xinjiang City, Suzhou, and Shenzhen area. While in Malaysia, it is for some enterprises that can provide green technology services and without restricting the area. We call it green technology tax incentive. In addition to the different target companies of tax incentives, the difference between the tax policies of the two countries is also reflected in amount of tax incentives. Companies recognized as high-tech industry in China can enjoy bonuses ranging from 100,000 to 300,000 RMB tax breaks, as well as tax exemption for up to 2 years, a 50% tax reduction for 3 years, and a 15% tax reduction thereafter. And in Malaysia, companies with GITA asset approval are eligible for investment tax credits. Companies engaged in solar leasing activity are eligible for tax exemption of up to 17% of their statutory income for 5 years. And in some cases, tax exemption ranging from 5 to 10 years, depending on installed capacity.
Thank you, Yurui. I am Sarah Farisa and I will continue the presentation. To conclude the overall findings, Malaysia and China have different policies in applying their tax incentive. For investment incentive, China focuses more on domestic and foreign investment, while Malaysia is focusing on pioneer status. Both countries have their own investment incentive to attract investors by giving them a lot of benefit when making investment. Next, for technology incentive, China is focusing more on high and new technology, while Malaysia is focusing more on green technology. Both countries have their own strategy to achieve for everyone's benefit. Tax incentives have caused a huge impact to the country's development, plus it can help business to maintain growing up. Tax incentive also can influence economic growth and opportunity cities if they are strategically targeted to the right businesses and business behavior. That's all from our group. Thank you.